Hello everyone, welcome back to my YouTube channel. In the last class, we have solved the problem under direct method or asset account method. That is the method of recording depreciation. In my previous classes, we have solved this problem under direct method using both straight line method and written down value method of depreciation. So in this method, what we will do here, depreciation that is directly deducted from the asset account, right? And in balance sheet, we will shows its reduced value under direct method. So today we are going to discuss about indirect method. That is also one of the method of recording the depreciation or provision for depreciation method. Here what we will do here, in this method we do not reduce the asset account directly, but here we will create a separate account that is called as a provision for depreciation account or accumulated depreciation account. Clear? So, and finally in the balance sheet also we will enter the amount that is the original cost of the asset minus provision for depreciation. So the balance, that is the net book value, we will enter in the balance sheet. So here the journal entries under this method is, first for asset purchase, that is asset account data to bank account. At the end of each year, like direct method, we will pass two entries for charging the depreciation to provision account. That is depreciation account data to provision for depreciation account. But under direct method, for deducting the depreciation from the cost of the asset. So the entry is depreciation account debtor to asset account, but under indirect method the entry is for charging depreciation to provision, that is depreciation account debtor to provision for depreciation account, and for transferring the depreciation profit and loss account debtor to depreciation account, the same entry will come here. So let's solve one problem. 1 minute. On 1st April 2020, XYZ Limited purchased a machinery for rupees 1 lakh. The company decided to provide depreciation at 10% per annum on straight line method. Here we are using the straight line method by creating a provision for depreciation account and profit and loss account for 3 years. Means here we have to prepare the provision for depreciation account and profit and loss account or depreciation account for 3 years. Clear? So let's first we have to calculate the depreciation. Depreciation how much? 1 lakh into 10%, that is equals to rupees 10,000. Means here we are following the straight line method of depreciation. So the depreciation amount same, that is rupees 10,000, same for all the 3 years. Clear? So let's solve the pass the journal entries. For purchase of the machinery account debtor to bank account, that is rupees 1 lakh. After that, which entry we will pass? At the end of the year, we will pass two entries. That is first one for charging the depreciation to provision account. For depreciation account debtor to provision for depreciation account, how much? 10,000. Here depreciation account will be same for 3 years. Clear? And for transferring the depreciation to profit and loss account debtor to depreciation account, that is rupees 10,000. These are the journal entries we need to pass under indirect method. Only here second entry means for charging depreciation, that will change, and remaining all are same like direct method only. Clear? So now we have to create a machinery account for 3 years. So first, this is the format of ledgers. First what we have to do, see the journal entries. First one is machinery account debtor to bank account. Means here bank account, we are preparing the machinery account. Here bank account, that is credited. So what we have to do, we need to debit the bank account under machinery account. So write down to bank account how much? Rupees 1 lakh. And after that, here there are no other entries. Here depreciation account debtor to provision for depreciation and for transferring the depreciation to profit and loss account. So there are no other entries we have passed in the machinery. So that is, so only one entry will come under machinery account, that is to bank account rupees 1 lakh. So after, on 31st 3/21 year end by balance carried on, that is rupees 1 lakh. Now again on 1/4/21 to balance brought down how much? Rupees 1 lakh. Again at the end by balance carried on 1 lakh. 2 years over, and last third year on 1/4/22 to balance brought down 1 lakh, and at the end 31st/3/23, that is by balance, sorry here, carried on, by balance carried on rupees 1 lakh, and 1/4/23 to balance brought down rupees 1 lakh. So in this way we need to pass the machinery account. Only one entry will come, that is for purchase, machinery account debtor to bank account. So here machinery that remains at rupees 1 lakh every year in the ledger. Clear? And after that what we have to do, now we need to create a separate account that is called as provision for depreciation account. So first entry what entry will come? See here, for charging depreciation to provision account. Depreciation account debtor to provision for depreciation account. To provision for depreciation account, and we are preparing the provision for depreciation account. So here depreciation account is debited. So in the ledger what we have to do, we need to credit the depreciation account. So by depreciation, how much? 10,000. When? On 31st/3/21, because at the end of the year we will use to pass these entries, right? For charging depreciation and for transferring the depreciation to profit and loss account. These are the two entries we will pass at the end of the year. And here again 31st/3/21 to balance carried on, that is rupees 10,000. Again on 1/4/21 by balance brought down, how much? 10,000. And here again on second year we are passing passing the depreciation account, means here again depreciation account we need to write down, and here the amount will be same, that is rupees 10,000. Means we are following the straight line method of depreciation, right? So the amount will be same, that is rupees 10,000. So total it is 20,000, and to balance carried on how much? 20,000. Write down 20,000. Here we need to close the accounts. And after third year by balance brought down, how much? 20,000. Again on the third year the depreciation is rupees 10,000. By depreciation account 10,000. So total 30,000. Here to balance carried on 30,000 on 31st/3/23. So this is, we need to close the account, that is rupees 30,000. So first year, second year, third year the depreciation amount is same because we are following the straight line method of depreciation. Clear? Here we can pass the journal entries for first year, second year, third year. Clear? That is 10,000 only will come because we are following the straight line method of depreciation, right? So in this way we have to prepare a separate account called provision for depreciation account in indirect method. Clear? Now which account we need to create? Depreciation account. That is also for 3 years, depreciation account. So just see the journal entries. Here depreciation account is there, and to provision for depreciation account, that is credited, and in depreciation account what we need to do? We need to debit. That's it. See here, debit 31st/3/21 to provision for depreciation 10,000. And next which entry will come? We are transferring depreciation to profit and loss account. To profit and loss account. Profit and loss account debtor to depreciation account. We are preparing the depreciation account. Here, so don't see the depreciation account. Profit and loss account is debited, and in the depreciation we need to credit. We need to credit the profit and loss account by profit and loss account 10,000. In the same way for second and third year, to provision for depreciation 10,000, at the end by profit and loss account 10,000. Again on third year 31st/3/23 to provision for depreciation account 10,000, by profit and loss account 10,000. So in this way we have to pass the entries. Now balance sheet presentation. How we have to show the balance sheet? What is the cost value of machinery in the balance sheet after 3 years? Machinery, that is rupees 1 lakh original value, and provision for depreciation. Deduct provision for depreciation. How much? 10,000, 10,000, 10,000. First year, second year, third year, that is 30,000. So net book value of the machine is 70,000. That is after 3 years. After 3 years. Clear? Easy, right? In this way we have to pass the journal entries, and we need to prepare the ledger accounts under indirect method. Only the difference is here we will create a separate account called provision for depreciation account, and under journal entries also, here in direct method what will come, depreciation account debtor to asset or machinery like building account, that will come. But under indirect method, depreciation account debtor to provision for depreciation account will come, that is rupees 10,000. Depreciation account debtor to provision for depreciation account will come. Clear? So I hope this method also clear to you all. So if you have any doubts, please leave a comment. Thank you.